Alright guys, welcome back. It's Friday, markets are closed. I hope you had a great week. This week we will quickly go over the Google trade from Tuesday. That was up 209%. It was just one put, a small trade, the only one I did this week, but as promised I will outline it. I will also briefly discuss some potential in a stock for next week or the week after, so stick around until the end. Alright, so first I just want to go over the SPY. We can see we did gap higher and had some follow through, but it was rather volatile. Here's a quick chart of the S&P today. You can see that it was rather volatile throughout the day, even after the open, making it really not optimal for 0-day to expiry options, right? Ultimately, on the week, we got exactly what we were looking for last week, which was this inverted head and shoulders pattern that I outlined. Go back and watch that video. It was pretty clear. So for the S&P, the question is, what now? Do we get more follow through? Well, look, after 3 days of moving higher, at some point we will have to reach resistance, right? Now, of course, this is a big reversal with the inverted head and shoulders. So it is possible that this market runs away. If I cannot speak on the potential of a stock, I will not. Okay, I will not force any trades if I do not see them. And right now, I will step away from the S&P as after a good move, actually quite a few good moves, I suspect we will be back to the grinding market, sort of smaller, higher moves possibly at this point. Overall, it's just really not clear for me. Now, I do think that this bull market has resumed, and we just need a bit more before we get back to new all-time highs. Looking at how strong the S&P has come off of this pattern, this inverted head and shoulders, we should get there shortly. Okay, that said, there will be volatility along the way. After these few weeks, I cannot make out any obvious trade potential for the S&P at this time, but near term we may experience some consolidation. That's all I'm feeling right now. So that is a very simple summary of the overall market, the S&P. No predictions today. Now let's take a look at Google. This was the only trade I was in this week. I pointed this out on the weekend Sunday video of Google that we had come up a good amount from this low here. And we have come into this downward resistance trend line here. We had stalled for 2 days. And if we had a third day, that it could be a good place for a high probability, high conviction short. So here's the trade. It was small, just one contract, you can see here. And look, I'm going to continue to take small positions if I continue to test these ideas publicly, which I may not. This was the October 15th put, $2,775 strike. Robert asked about this. Generally, if you are trying to time the market, you get more by using the closest expiry and not by paying for all that extra time for longer dated contracts, right? Either the contract and the play works exactly as you said, or you're wrong. Right? That's how I see this endeavor. Anything else, in my opinion, is gambling. You have to play like the house in a casino, looking only for optimal trades at optimal times. And while we've been successful on this channel, another big thing is accepting that not all trades will work and using a small position size to protect capital. Now, in terms of strike, the further out of the money you go, the more risk you take on. Generally, if you're good, you can play it safe by being close to in the money, right? So at the money is safer and you still get outsized gain. So for the trade itself specifically, I'm just going to go down to the 15-minute mark and get rid of this. And so I bought at 12.06, which was right around here. This is where I went short. I wanted to see the stock stall out here, up here, and as soon as I saw this start to roll over, I suspected that it had been the final high before it gave up this big move and started to move lower. That's what we got. We got a little bit of a move here. It came up a little bit. We then accelerated into the close. Now, the next day we did gap higher, but I was rather confident that we would move lower because of a combination of the fact that, well, We can see this on the hourly one. We were still in a downtrend, right? So we had a series of higher highs and higher lows. You can see the highs are lower. We were at this resistance as well. We had now stalled for 3 days after moving higher for 4 days. And we had a high MACD over here that looked to be rolling over, right? It was already kind of a little exhausted. So my reasoning was that, yes, we gapped higher from this close, but we had accelerated into the close. We sold off fast. This gap wouldn't be a reversal of this move lower. It would just be an aberration around the open. And more to the point, I reasoned that I could not imagine this MACD having now started to already flip negative, all of a sudden decide to flip positive, right, and turn up. I think that this was just an aberration, and that was fine, and the stock needed more room to come down, and it did. And that was basically it, and profits were taken sometime around here. It wasn't at the exact bottom, but as I mentioned, Google did gap higher the day after, and those options proceeded to expire worthless. So that was a good trade overall, I think. I hope that you can appreciate the thinking process I'm going through when I do this analysis and when I execute, and hopefully I can do that again next week and the week after. So now, as for potential next week, I cannot help but be attracted to Facebook. The stock has come down a lot, 5 weeks in a row. Let me just pull it up here. Yeah, it's just really come down a lot. I think from top to bottom, that's around 15%. And I think we are quickly approaching a point where we should expect some sort of a relief rally. But, even look at this. This is holding right at the 200-day moving average, right? And look at this weekly, right? It's holding at this 50-week EMA, which is where it held here. And obviously the circumstances are not the exact same. So we have to really pay attention to this. Right now, the idea is just starting to materialize. So, for me, ideally, I would just want maybe one more pullback, and then we can get some sort of a relief rally. It doesn't even have to retrace all the way up here. I would really just be looking for 340. I mean, look, if this downtrend stops, then it might move higher than that, obviously, ultimately. But what I'm thinking of is just a move for next week, where it comes down here a little bit, and then we get a nice little bounce, at least to here. But like I said, this idea is just materializing, and I think I will have to sleep on it. So I'll publish that idea on Sunday along with an update of CCJ and initiation of coverage on BlackBerry and Tilray. Again, I hope everyone had a great week in the markets, enjoyed the time off. Have a great weekend, guys. Take care.